Welcome back. Well, it's quiet cues as far as the implied open is concerned, though Asia is looking at a pretty decent rally, but it doesn't seem to be rubbing off on us here. I mean, the other markets I'm talking about, mainland China, Japan doing really well today. Implied open about 7 points lower. Let's see if the bulls can actually build on their good form from yesterday. There are plenty of stocks to go over as well. Last of the earnings coming through and an acquisition by Indian Hotels. So let's straight away get to our list of top stocks to watch. Nigel, kick it off. Hindalco, how do the numbers look?
Well, Hindalco, will be in focus because Novelis came out with its set of numbers. So we'll analyze that. And later during the day, we'll get the India business numbers. Now, Novelis's numbers were softer than expected. The EBITDA per ton came in at around $430 per ton. The street was bracing for a number of around $450 per ton. Why is that? Scrap prices were elevated. That's point number one. That's the input cost for them. The product mix itself was not that great because demand for cans was good, but unfortunately for specialized products wasn't that great as well as auto. And also the tariff impact is clearly showing up. So the shipments were up by close to 100%, adjusted EBITDA was down 17%, and on a per ton basis, it was down by close to around 19%. The tariff impact they've quantified for the past quarter, it was around $28 million. And since we don't have a breakthrough, they're bracing for a $60 million impact in quarter two itself. And the chart should come up for you. The EBITDA per ton, well, it's come down to close to $430 per ton. That's down from around $490 per ton. Even in absolute terms, well, it's down to around $416 million. So the EBITDA performance, both on a per ton basis as well as on a absolute number, that did dip. But management is sounding optimistic about things improving from here on. They're calling for a bottom on EBITDA in the first quarter itself. They're saying because of the cost-focused measures, things will improve, particularly in the second half of the year. And in terms of the cost saving, they are now guiding for $100 million. What adds to the pain is that the net debt number as well has moved up marginally, and it's at the highest we've seen in the last 19 quarters. So weak set of numbers coming from Novelis. The only solace is that the management is calling out for bottoming out of the EBITDA number. So expect a tinge of red on that particular stock. Moving to Ekta, she's here to tell us about Dr. Reddy's as well as Oro Pharma. Ekta?
Well, yes, a couple of these pharma stocks, in fact, are going to be in focus because the US drug regulator, the US FDA, has approved two generic versions of the drug iron sucrose, and it is approved by Viatris and Amphstar. So those are the companies which will be able to sell the generic version of iron sucrose in the US market, and both may be eligible for 180-day exclusivity. Now, iron sucrose, remember, is an important pipeline product for the likes of Dr. Reddy's, Aurobindo, Sun Pharma, Gland. All of them were vying for this particular product, but now two other companies have entered the market. The market is around $500 million. What this means is because no Indian company has received approval for it, then maybe it could be a dwindling opportunity, a lost opportunity if in case the approvals do get delayed, and hence we could probably see these stocks a bit in the red on account of this.
All right, thanks very much, Ekta, for that. So keep an eye out on those names. Indian Hotels is the next one. Vinny's got details here. Vinny, morning.
Good morning. So yes, keeping an eye out on Indian Hotels, we're expecting green coming in for the stock today after the company has acquired 51% stake in ANK Hotels as well as Pride Hospitality. This is for around 204 crore rupees. Now, what this will do is this will add mid-scale hotels to Indian Hotels' overall portfolio, and this is expected to be completed by November 2025. In terms of overall strategy, also strengthening its presence across geographies and mid-scale segments, expanding its portfolio by 135 hotels, as well as this is aligning with the strategy that Indian Hotels has of asset-light growth is what they want to focus on. So that is something interesting that is coming in there in terms for the acquisition from the company.
Okay, all right, got that. So Indian Hotels will be on our radar. Well, as usual, expecting some more blocks. We have Nimesh joining in with what the action today could be like. Nimesh?
Well, Surabhi, another day, another large block. So there is a clean-out trade in Medi Assist. One of the promoter entity, Bessemer India, is looking to sell its entire 15.7% stake via block deal today. The floor price is 507, which indicates a 4% discount to yesterday's closing price. Interestingly, after this block deal, the total promoter holding will fall to below 5%, and the institutional holding can go up to as high as 75%. So a large block could open in the red if it's not in the block window. But the interesting point is that the promoter holding will fall below 5% after today's block.
Okay, all right. Thanks a lot for that, Nimesh. Well, let's go to Vinny. She's here to tell us about Bata India. Vinny, it's not running away.
Yes, it's not running away. Soft quarter again that's come in for the company. Now, overall, EBITDA also this time has been a bit muted. Lower other expenses is what has come in for the company. Though optically you see and you'll feel like the profits are lower because there was an exceptional gain last time. But other than that, what you're seeing coming in, flattish revenue growth, 9th consecutive quarter of revenue growth that has been subdued for the company. The average selling price that we're looking for the company has also been very muted and declining for the 3rd consecutive quarter. So overall, demand hasn't been exciting. Weather was not something that was supporting overall Bata sales as well. And one more weak quarter and subdued quarter for the company is what we're seeing. We could expect red on the screen for the stock.
All right, Vinny, thanks very much for that. Astral is the next one we want to focus on. Ria has got details on this one. Ria, morning.
Well, good morning. Astral has reported quite a weak set of numbers in Q1 of FY26. Revenue lower by around 1.5%. The EBITDA and net profit have taken a hit of around 14% and 34% respectively on a year-on-year basis. Margins have also declined by around 191 basis points. Even if you look at the individual segments, the plumbing business and the paints and adhesives segment of the company, the margins have fallen quite a lot for each of these segments. Volumes for the plumbing business are largely stable at around 56,000 metric tons. Now, commenting on these results, the company has said that overall the demand scenario in the polymer industry was weak in this quarter, and that the PVC price volatility that we've seen over the last few months has resulted in inventory losses and also affected the realizations. But going forward, what they've said is that PVC prices have actually been seen settling down since the beginning of Q2 of FY26, and market conditions have also been seeing some improvement. So the outlook remains positive for the quarters ahead. And another bit of news flow to keep your eye out on, they've also approved the proposal for the acquisition of an 80% stake in a company called Nexalon Chem Private Limited, and this will be done to manufacture CPVC resin, which is a key raw material for the company, and it's expected to help in cost optimization for the company as well as a substantial margin improvement once the operations start from the second quarter of FY27.
Okay, all right. So positive commentary coming in from Astral there. Thanks for that, Ria. Let's move across and go to Vamakshi. Vamakshi is looking at Praj Industries numbers. Morning, Vamakshi.
Good morning, Survi. Not such a great set for Praj Industries. The revenue dipped by almost 8% on a year-on-year basis. The EBITDA margin contracted by almost 825 basis points, given that operating expenses actually rose this time around, and the EBITDA contracted by 66%. Take a look at the net profit as well. A 94% cut is what we're seeing as far as the net profit is concerned. But also keep in mind that this could also likely be because in Q1 of FY25, there was an exceptional gain of around 28 crores, which was on account of a profit of a sale of land. But even accounting for that, there is definitely a fall in the net profit. As far as segment-wise revenue is concerned, bioenergy, which is one of the largest segments for Praj, saw a dip of almost 24%. On the other hand, this was offset by a 29% jump in engineering and a 41% jump in high purity. Now, this time around, the performance was impacted on the back of a couple of factors. First off, there were the domestic ethanol business witnessed some delayed execution cycles as well as liquidity crunch. This was mainly on account of the problems at the customer's end. The Genec business incurred expenses with no corresponding revenues, and of course there was delayed execution of a couple of high-value engineering orders, which led to higher labor costs as well as infrastructure costs. The ordering activity too dipped by almost 11% this time around. So given those details, not such a great set coming in for Praj Industries.
Okay, all right. Thanks a lot for that, Vamakshi. Well, let's go back to Vinny. Very busy morning for you. You're tracking Titagarh Rail as well as Tilaknagar Industries. No slowdown there. People are tanking in the brandy.
Absolutely. But first, let's talk about Titagarh Rail. That stock, we're expecting a muted performance that we saw in Q1. So red is what we could see on the screens. Now, revenues are down by around 25%. EBITDA margins down by 27%. Margins have seen overall contraction as well of around 20 basis points, more than that. Now, what is impacting them this time is the weak performance that's coming in the freight railway system segment of theirs. That has seen a contraction of around 27%, and that is dragging the overall revenue growth of the company. Now, in terms of wagon dispatches, also that has been weak in the railway wheel factories, and that is the reason why we're seeing lower growth coming in for freight railway systems. So company and management is saying that they're confident of recovering the loss in by the end of this year. Production has started normalizing by the end of this quarter as well. So that will be interesting to watch out for. Wheelset supplies by the end of July have normalized, so not much of a concern that we could see coming in Q2 FY26. And they're expecting FY26 to see similar offtake in terms of wagons as we saw in FY25. Now talking about Tilaknagar Industries, great set of numbers that's coming from the company, doubling in terms of profits. 88 crores is what the profit is at versus 40 crores last year. Good growth in terms of revenues. Margins are at a multi-year high as well, 23.1% versus just 16% last year. So clearly a good number that's coming from Tilaknagar, and green is what we could see today.
Absolutely. Starting the year on a high. That's the Tilaknagar Industries. Got it, Reddy. Thank you very much. So let's quickly recap our list of stocks to watch. The ones that have positive news flow around them this morning: Indian Hotels and Tilaknagar Industries. That's 8. And then you have 8 on the red side today, including Hindalco, Dr. Reddy's, Oro Pharma, Medi, Bata, Astral, Praj Industries, and Titagarh Rail Systems. So a mix of slightly weak earnings and some negative news flow from the US FDA for the pharma companies. Okay, so that's our top 10 list for the day. Let's look at what's happening in the world of commodities as well. Manisha is joining in as always. Morning, Manisha. So tariff, non-tariff, this whole gold business. Finally, it's not tariff, right? That's the final verdict from Mr. Trump.
Well, yes, a formal, proper notification is yet to come. But then U.S. President, when he tweets saying gold will not be tariffed, you understand that. And that's the reason you've seen the gold prices decline so sharply. We did see an all-time high at 3,530 on Friday. It's trading at 3,350 right now. So we are down $250 an ounce from those kind of levels there. And overnight as well, it has been another 1.5% of a cut coming into the market. So this clearly is easing fears of sharp rise in gold import costs. And that is what the markets are working with. Also, apart from that, the U.S. signing an executive order extending pause on U.S. tariffs on China for another 90 days also has led to no more safe haven buying when it comes to gold and silver as well. Silver, by the way, fell nearly 2% overnight. So we're looking at huge profit taking in all these precious metal commodities. What is doing well actually has been the crude oil prices. After that 4.5% decline in the previous week, we're looking at some stability coming back. U.S. has signaled that there would be no new sanctions on Russia crude until the talks continue. So that is what the markets are reading in right now, and that is what has led to some support across metals as well. So copper, steel, iron ore, all trading in the positive.
Okay. All right. Got that. Thanks very much, Manisha, for the update. We'll take a quick break on that note. On the other side, we have the management of Office Space Solutions joining in to discuss their quarterly performance and, of course, the outlook for the rest of the year. And after that, we'll have Amnish Agarwal joining in for some fundamental stock ideas.